Good morning and welcome to this morning's meeting of the Economy Committee. Can I just give an instruction? If you want to speak, press the little face there and it gives you a mic. Welcome to this morning's meeting of the Economy Committee. We will be discussing the future of London's financial and professional services. Please can I ask everyone to switch off their electronic devices to silent mode to avoid any unwanted interruptions. Can I ask our clerk, Lorraine Harvey, if we've had any apologies?
Thank you, Chair. No apologies have been received.
Can I ask the committee to note the recommendations set out in item 2 and ask members if they have any other interests to declare?
Noted.
Can we confirm the minutes of the Economy Committee held on the 10th of November 2021 to be signed by me as a correct record?
Noted.
Can I ask the committee to note completed actions and ongoing actions arising from previous meetings?
Noted.
We now move on to the main item of business today, our discussion with invited guests on the future of London's financial services and professional services. I'd like to welcome our guests, Alan Simpson, Interim Chief Executive, London and Partners, Rajesh Agarwal, Deputy Mayor for Business, Anna Purchas, London Office Senior Manager, KPMG, and joining us over Zoom are Professor Sarah Hall, Senior Fellow, the UK in a Changing Europe, and Miles Chelek, Chief Executive for the City UK. As is our tradition, I will ask the first one or two questions and then we'll go from there. Just good morning again to all our guests. Thank you for attending. Thank you, Deputy Mayor, because I know you are our best attendee, so very pleased to see you. I'll ask this question to Miles and Professor to start with, and I'll come to you probably later on, Rajesh. As the world recovers from the impact of the pandemic, how has London's financial services sector responded to the challenges and adapted to remain relevant? If I start with Miles, please.
Thanks very much, Chair, and thank you for the invitation to participate in this. As members may be aware, the City UK is the representative body for financial and related professional services here in the UK, and in fact was created partly at the request of the GLA and the Mayoralty about 10 years ago, and the Mayor puts a representative on our board, as does the City of London Corporation. We work very closely in partnership with both. And I'd like to take this opportunity to thank Rajesh and the Mayor for all the efforts they've made over the last 18 months and beyond. In terms of dealing both with Brexit and with COVID. In terms of the question that you've asked, Chair, so I'd say the first thing is that the industry has been has avoided disruption. It's been stable. It's been able to support economic activity here in the UK and more broadly. So the markets functioned well. We work very closely with regulators, with central government, with devolved governments and international governments to make sure that the industry was able to do its bit to support economic activity and to keep the economy going through those, particularly those early days of hibernation during lockdown. I think there's still a lot of noise amongst the signal in terms of some of the longer term impacts here. So the very fact, for instance, that we're doing this meeting as a hybrid meeting, I think there are questions about what this means for cities, what this means for particularly clusters. So one of the great advantages of London and also cities such as New York or Hong Kong or Singapore is the cluster effect of talent that they bring. Deloitte did a report a little while ago that showed that London is the biggest concentration of high-skilled jobs anywhere in the world, 1.7 million high-skilled jobs here in London. The next biggest centre is New York with 1.2 million. As we move forward, what does that mean in terms of where people want to be based, particularly younger workers? We've got a highly mobile population in some of the areas that are of particular interest for the future of financial and related professional services. And here I'm thinking of fintech, digitization, green and sustainable finance. If you look at fintech, for instance, 42% of the people working in fintech here in the UK are from outside the UK. So how do you make sure that you can continue to attract these people? How do you keep a city like London attractive, not just in terms of the important things such as infrastructure, and here I'm thinking of transport in particular, but also office space, but the appeal of a city such as London. It's a very easy sell to say to somebody outside the UK, you're now going to do 2 years working in London, or indeed the rest of the UK, but particularly London. It's a global city, it's a global population, there's an enormous amount of soft infrastructure. It makes it very appealing to work in. And then the final point I would raise is also the consequences this might have in terms of regulation and supervision over the long term. Regulation and supervision is often place-based. It's based not just within borders, but as we found during the COVID crisis, often certain trades have to be done in a controlled environment. They have to be done in the office. What we found during the crisis was that the UK was able to, the Bank of England was able to go on with its gilts program out of somebody's bedroom. This was a very different way of doing things. And to what extent does regulation and supervision therefore need to adapt as we move forward to address those sorts of things?
Thank you for your comments. And our latest report has been about supporting our nighttime economy because it's part of the soft infrastructure that makes London very, very attractive. If I can move on to the Professor, please.
Good morning, Chair, and thank you very much for the introduction. So when I think about the future of London, I make a distinction between COVID, which I think is more of a shorter term set of impacts, and Brexit and the reorientation of London's economy outside of the EU, which I think is more of a medium to longer term. So I'll just take each of those in turn. So on COVID, I very much agree with Miles that financial and professional services weathered this well. There wasn't market instability. I think this was largely because a lot of the work that goes on in financial and professional services could pivot to home and hybrid working. So that does raise questions about what that looks like in the future. I think it's, though, important to note that some of the soft infrastructure that you just mentioned, Chair, had a much harder COVID, and indeed still is, and particularly with Omicron and the introduction of Plan B. I think one of the vital aspects of the clustering effect within London is the hospitality sector. We know from research that the hospitality sector isn't a kind of nice add-on to financial and professional services, but is actually quite a critical place in which knowledge and expertise is shared. So I think on COVID, I would be looking closely to see what happens in terms of that softer infrastructure, which I think has been impacted more than financial and professional services themselves. I think in terms of the UK's trading relationship, obviously London is known as a genuinely global and international financial centre, and that's quite distinctive from other European centres, and makes London in many ways much more similar to New York in terms of that kind of genuine international global outlook. That's been a recurring theme throughout the history of London as a financial centre. But there's just a couple of things to note about that. So New York obviously has a large domestic hinterland upon which it can provide financial and professional services. The UK economy isn't the same size as the US. And so for London continuing to act as a kind of global hub within the international financial system is going to be important if it's going to maintain its position as a leading international financial centre. We have seen some early signs of changes in the trade relationship between the UK and the EU, and it looks like some diversion of trade away from between the UK and the EU towards the UK and the US. And Miles had a report out, I think, earlier this week that showed the sort of growth in exports to the US outpacing those to the EU for the first time since those records were collected. But I think the key point on Brexit is that it's very early days. So the sort of worst case scenarios in terms of job relocations from London haven't happened. So the number of jobs that's been relocated out of London to Europe is lower, I think, than a lot of the worst case estimates. But I do think we need to have a little bit of caution with those figures. Business plans have clearly been disrupted because of COVID. And I don't think we're at the kind of end point in terms of what the UK's trading relationship with Europe will look like for financial and professional services. So I think here there's questions about the EU's interest in brass plating and chaperoning, for example, and what that might do to business models. I think we also need to think about labour market mobility. I very much agree with Miles that attracting international, highly skilled labour into London has been central. So I think here we need to think about visas, but also mobility more generally, so shorter term business, depending on what happens post-COVID. I think the regulation will be critical, and there's obviously an awful lot of work going on there, but it does seem that financial services is one of the areas where the UK government is particularly interested in exploring how regulation might be used to trigger a Brexit dividend. And finally, I do think we need to think about London's relationship with other financial centres. I think there might be a slight risk that if we focus just on UK Europe, we actually miss out on some of the really significant growth markets in financial services, particularly in the US, but also Singapore and Asian markets.
Thank you for that. And you beautifully segue me into my next question, which has been, and I'll start with Miles and come back to you, Sarah. I'm sorry, Sarah, I've been referring to you as the professor. Maybe I should call you by your given name. What has been the main challenge and opportunities, and what are the remaining challenges from the impact of Brexit, from the pandemic for London moving forward? So challenges and opportunities.
Sure, thanks very much for that. So the first thing I'd say is I think it's really important to pay tribute to the work that was done by government and by regulators, and indeed by industry on both sides of the Channel and indeed Irish Sea in the run-up to Brexit. So pretty much from the day after the referendum, all of those groups went into pretty intensive planning to ensure that the risks of market disruption and economic dislocation were minimised. And I think we can see that we had Brexit, and even right after that, with the impact of COVID, the amount of market disruption has been very minimal, if at all. And so I think that is testament to the amount of work and planning that went in. In terms of what remains to be done and what remains to be seen, I would very much agree with what Sarah has said. We are seeing, I think, an evolution. So people may call it divergence. It's also been described as parallel evolution between the UK and the EU. But the thing to bear in mind here is that whilst the UK and London in particular were highly successful and remain in many ways highly successful as a European financial hub, that was always a minority even of the international business that took place in the UK. It peaked at around 40% or so. It is now, as Sarah's talked about, it is now in decline, and she kindly referenced the report that we issued earlier this week that showed that the US is now our major international export market, taking about 34% of all of the exports in financial services from the UK. And financial services exports in the UK are the most successful of their kind anywhere in the world. We are the most successful exporter bar none. In fact, we export more financial services than the next three countries put together. So that gives you a sense of the scale here, and it also gives a sense, again, building on what Sarah was saying, that the domestic market here in the UK, while significant, certainly isn't of the sort of scale that you would expect from the US. And so we tend to be more export-minded than even centres such as the US or China. That tends to be the focus from the UK. In terms of things that remain as areas of risk with the EU, the broader political relationship is clearly troubled and clearly has a number of areas of tension, and what we've consistently asked for is that the very technical relationship between the UK and the EU in financial and professional services, and the European ecosystem that exists in financial and related professional services, shouldn't fall victim to political debates and political arguments that are happening in parts of the economy that have nothing to do with financial and related professional services. Secondly, and related to that, we think it's unfortunate that the MOU on financial regulatory cooperation has yet to be agreed by the EU. I think the UK is ready to move on that and has been for some time. And whilst that sets up a number of formats and forums for regulatory cooperation and is not in itself a decision-making body, it is nonetheless, we feel, helpful as a mechanism for sharing of best practice and air traffic control between the UK and the EU. And then the other area that we have concern about over the longer term is this approach that could be characterised as a market location approach over a market efficiency approach that the EU has now adopted, which builds on its open strategic autonomy concept that it's taking forward. So there's very clearly a decision to prioritise sovereignty over market efficiency and cost. And we feel that there are a number of risks that come with that. Equally, on the more positive side, the recent decision on CCPs having their equivalence extended, I think, was absolutely the right thing to do on both sides, and I think reflective of both sides, particularly on the EU side, beginning, I hope, to listen to customers and businesses a little more. But then that's balanced out by things such as the Lugano Convention on judicial cooperation and enforcement, which appears to, again, have been held hostage by the political circumstances.
Unfortunately, politics can do that. Can I just bring Anna in at this point and just ask, what for you have been the main opportunities and challenges that still remain?
Thank you, and thank you for inviting me today. Really looking forward to hearing from the other speakers and seeing how we can learn and move forward together. So at KPMG, and just for those not familiar with us, we're about 16,000 of us in the UK, approximately half our workforce based out of our office in Canary Wharf. COVID has meant for us two things. In terms of client service, we were able to move very fast to working from home. We had, luckily, the technology in place to allow us to do that. So it didn't mean any drop-off in terms of client service and how we could work with our clients in very different ways. For all of us working at KPMG, working from home until last summer, and most people did work from home until last summer, was, of course, very different. We put the well-being of our staff at the forefront, of course, of our agenda, and focused on health and safety. That meant working from home. We did recognise that that has mental health implications, and from the regular surveys we did of our staff, we could see that loneliness, mental health were increasingly a concern for us that we needed to focus on. So when guidance did change and we were able to think more about bringing people back to the office if they wanted to do so, we were able to do that. We did do that at KPMG, and prior to Plan B coming into place, we were moving forward with our hybrid working plans, which we see as an excellent way forward and a very beneficial way forward for our employees.
Anna, can I just ask you a quick question? So what sort of proportions are we talking about of your workforce that was working from home and has now returned to the office?
So for most of COVID, everybody was working from home, and unless there was a very significant personal wellbeing reason to come in to the office. So the vast majority working from home, in line with government guidance. When we started to say, if you want to come back, you can come back, either for a business critical reason or for personal wellbeing, or latterly for personal choice, we were up to about 40% of people coming in. But we do still have a minority, but a minority of people who haven't been in at all and chose to continue to work from home.
Okay, thank you. Let me just move on to my second question. I'll start with Sarah. What progress has been made on post-Brexit bilateral trade agreements, and what does this mean for London?
Just unmute myself. Yeah. So I think one of the surprises, at least early on, following the agreement of the Brexit trade deal, was that that didn't unlock additional market access into Europe for London-based financial services. And I think Miles has shown that on that UK-EU relationship, things are rather more strained than we might have expected. On trade and financial and professional services, I think the first thing to note is that trade deals don't typically do that much for services. Not as much as they do in terms of liberalising goods trade, for example. Although that being said, I think there is evidence that they're important in terms of fostering trust and also potentially fostering regulatory dialogue and cooperation. So I wouldn't say they're unimportant, but I think we just need to be a little bit cautious about how significant they are. I think the other point to make is that trade is typically deepest within services with your nearest trading partner. So in other words, geography does matter in trade. London's done very well in terms of cementing a kind of New York-London trading relationship. I think that's the other kind of caveat I would make, that trade is harder now between the UK and the EU in financial and professional services. And so the prospects to offset that with other trade deals, we need to be a little bit cautious as we look for evidence. That being said, I would just draw your attention to three that I think are particularly important and might be worth drawing the committee's attention to. So the first is the UK-Swiss agreement on financial services. So Switzerland is clearly a key financial centre also outside of the EU, and the UK has been clear that it does seem to want to prioritise a trading relationship which would include mutual recognition for regulatory frameworks with Switzerland. So I think that's important. The second one I draw attention to is the UK-Singapore financial partnership. I think this is important because of the growth rates in Singapore and neighbouring markets. This was agreed in June 2021, and it does facilitate closer regulatory cooperation and includes an MOU that recognises UK-Singapore regulatory regimes. So although I think I'm a little bit sceptical about the extent to which trade deals in and of themselves could kind of stimulate financial and professional services trade, I think there are some important agreements that are taking place. And I think the third one that I would draw attention to is the Singapore-UK Digital Economy Agreement, which is a very recent announcement. I think this is really important, partly because it's quite innovative in terms of what it does on digital trade, but this is particularly important for London financial and professional services, because I think digital and fintech are one of the areas that London and the UK is seeking to stimulate post-Brexit to try and trigger a Brexit dividend. So I think showing leadership in facilitating digital trade and digital trade agreements is going to be important.
Thank you. I'm going to move on now to Assembly Member Ahmed.
Thank you, Chair. So my first questions are to Miles, Anna and Alan. What are the opportunities for the future of financial and professional services in London now that the UK has left the EU? I know you mentioned some of those things, but I just wonder if we could go into those in a little bit of detail. I wonder, Alan, if you could start.
Yeah, happy to, and hello everybody. Start with where the other witnesses have left off, really, which is to say that in some ways the level of access which has been won post-Brexit was worse than the worst expectation during the early stages of the negotiation. But the impact of that has been less severe, at least in terms of dislocation, than was the case. So some City UK analysis back in the 2016 period expected, if you include ecosystem impact, about a loss of 75,000 jobs. Actually, it's probably been a tenth of that gross, and net possibly job creation has actually gone up in the sector. So we're starting from the principle of not having to defend against significant dislocation loss, and that's a good thing. The challenge, I think, in some ways is the same as it was pre-Brexit, which is that Brexit is one of four mega trends affecting the city, and one of the others, of course, is the sort of a pivot to Asia. And I think one of the things that London needs to do is to make sure that it establishes London's standards as the standards which define the new phase of the global economy. And that's why it's been very important that since 2010, certainly, the government has had a real focus on London being a good partner for Asia as a fundraising mechanism. The second opportunity, which is also a risk, is that London has, in many ways, defined the last 150 years of global finance. It's been the place where modern banking has been developed, and that means that it's very hard, frankly, and to Miles's point, it's very hard for any other financial centre to counter us as the place where you raise global money. New York is where you go to raise money if you're American. The UK is where you go to raise money if you are from anywhere in the world. So if you're a Mexican company wanting to invest in the Middle East, you do it through London because both counterparties can be confident in our standards. But we are seeing significant disruption in financial services, and that's across payments, it's across lending, it's across retail, wholesale, the whole gamut. And I saw this in my time in the city. We can't assume that we win that. So Amazon transacts many more financial transactions in any given day than any high street bank. It's not based in the UK. So the risk and the opportunity for London is how do we make sure that we are as dominant in those emerging, disruptive, fintech-based financial and professional services models, and reg tech and law tech, as we have been in sort of the banking that I worked in for a decade. I think what that means is that innovations like the regulatory sandbox are incredibly important, because we need to be very good at being seen to be innovation ready as a market. And I was very encouraged by the speaker's comments about the importance of culture as well. I would say that, of course, as the committee knows, we run the tourism work for London as well. But if London can make itself a place where young entrepreneurs who are setting up businesses in fintech, reg tech, law tech want to bring their businesses, then I think we can have significant expectation of doing well in the next phase of the global economy.
Thank you very much. Anna.
Thank you. I'll answer the question through the lens of the professional services firms. So taking a step back and thinking about London, the advantages we have through the English language, through our regulatory and legal setup, through our time zone, that's led for us to, over the centuries, have developed professional qualifications which are recognised globally. And as I'm sure you're aware, people come from all over the world to gain a British professional qualification, which they then take back. And that's a very important part of how my firm operates as part of our global network. So I think thinking about that and what does that mean going forward, well, I think we have an opportunity as a sector to drive further growth for London and for the UK. I think that point is really important. We are very strong in London, as I said, about half our employees in London, but of those employees, they don't all live in London, they live across the UK, and hybrid working, of course, facilitates that. And the way we support growth throughout the UK, I think, is a very important point in the context of the levelling up agenda. So I think this sector, my sector, should be looked at as an opportunity for growth. In terms of where we could see growth, we've already talked about financial services. I think another area is in environmental services. This is, of course, hugely important for us. In the UK, we already have a great depth of expertise in that amongst the professional services sector. For me, I think it's an area for further growth. And that's in terms of when we're advising clients and doing deals, in terms of consulting services, and of course in terms of providing assurance over reporting to support people on their journey to improve. So I think ESG, that is a huge opportunity for growth of us for a sector in terms of the advice we give. And thirdly, I would say with some pride that I do think the professional services sector rightly takes a role as forward-looking employers. If we want to have the best talent working for our firms, we have to be strong in this area, because the best people want to work for firms which are forward-looking. So I think of my firm, we were very early reporters of gender pay gap, ethnicity pay gap. This year we've reported our socio-economic pay gap. We were a very early members of the minimum wage and then living wage foundation. So I think the role we have to play as very responsible employers, pushing for good practice, should be recognised as well and is an asset.
Thank you, Anna. Miles.
Thank you. I think Anna and Alan have both made a number of terrific points. I'll just build on those, and also just to add to the points that Sarah was raising earlier. You know, we have seen terrific progress on an international basis. Those FTAs don't tend to cover services much, but they open the dialogue for regulators and governments to talk to each other. The UK is the most successful services exporter in the world. 45% of our exports, or in the G7, 45% of our exports are services, highest proportion of the G7. And also a lot of the goods exports that we make have a connection to services. And so firms like Anna's, firms in financial services and elsewhere have contracts that are connected to goods trading. And I absolutely take the point that Sarah's raised on geography. That is absolutely vital. It is a slightly more nuanced picture when it comes to services, often particularly financial services, as we've seen with the fact that the US is now our largest export market for financial services. In terms of some of the specific areas that I would like us to see focusing on, and I think this is happening, thematically, I think green finance and green and sustainability issues, which has been touched on already, I think there's an area for the UK to build on. We're seeing huge progress being made there by the US, by France, by Germany. The UK, depending on which measure you look at, we are either in, very much in that pack or slightly behind. Either way, there's more that we can do there, and I think that draws on both the expertise in financial and professional services as we look at transition financing and transition support for the rest of the economy as we move towards net zero. So that was one of the areas that we identified when we launched our international strategy for the future competitiveness of the UK earlier this year. A couple of others, one around fintech, where we're clearly amongst the leading geographies, jurisdictions internationally alongside the US and China. And one thing I point to as evidence of the impact the UK is having here already is if you look at the UK-Japan FTA versus the EU-Japan FTA, they're very similar in many ways. They're not quite the copy and paste that I think some people claim they are. But on data localization, there is an explicit difference between UK-Japan versus EU-Japan. The EU's gone down a data localization route, which raises costs for customers. The UK and Japan have agreed not to do that, to explicitly rule that out. Investment, I think there's a huge amount that we can do in terms of driving investment into the UK and from the UK and the role that financial and professional services have traditionally played on that. And risk management, I think, is a huge area for London in the future. We've already got the fourth largest insurance industry, or fourth largest insurance market in the world here. There's a huge amount of expertise that exists in professional services. So there's I think a number of opportunities here, but we just need to, the final point I just make is we need to recognize, and I think this has been touched upon by all the speakers already, we don't have a God-given right to success here in the UK. Europe in particular is littered with financial centres that got it wrong and are now no longer the leading international financial centre, places such as Florence or Amsterdam. And the UK, whilst we are doing terrifically well in areas such as fintech, and we are growing overall, there are other centres that are growing faster than us in some areas. So we need a national effort to ensure that we do continue to utilise the industry here as a national strategic asset.
Thank you, and that leads very neatly on to my next question. So you've all outlined the challenges, particularly as a result of Brexit, and I wonder what, we've also talked about opportunities as well, which is very positive. I wonder, do those opportunities in your particular sectors outweigh the challenges? And I wonder, Anna, if you could start, because you were very positive about the opportunities.
Yes, I am positive about the opportunities. The concern some other speakers have already raised, the number one concern we have is skills shortage. I've never known such a competitive skills market as we have across the professional services sector as we do right now. That's partly driven by growth in demand for what we offer to clients. It is also impacted by a skills shortage. We have seen, obviously, a reduction in EU workers come to want to work in our sector, and that does cause us issues. So that's my number one concern in terms of making the most of the opportunities that I have. I'm less concerned about hybrid working going forward for our sector in terms of our staff. Of course, I am concerned about the impact that has on the economy in London and more broadly.
Thank you. Miles, could you, and if you, I can see the chair's getting a bit agitated, if we just keep it slightly brief, maybe bullet points, please.
Sure. So briefly, I completely agree with what Anna said. What I hear from companies when we speak to them in our membership is talent is the number one issue, both domestic and international. So we need to do better at getting people from other communities that aren't as well represented in financial and professional services in the UK into the industry, as well as being open to talent. Two other ones that I'd identify really quickly: tax. So this isn't just about the headline rate. This is about the streamlined, predictable, stable tax regime. We are uncompetitive when you look at particularly bank taxation, but as I say, it's more than just headline rate. And the other is on regulation. So we need to ensure that we've got agile regulation here in the UK. We are no longer part of a market of 500 million people with the scale that brings and the authority that brings in terms of regulatory negotiations. We need to be fast, we need to be agile, we need to be nimble. Very much welcome government's proposals on an economic growth stroke competitiveness duty for the regulators. We think that's a very positive thing.
Thank you very much. And Alan.
Mike, on this regulatory point, there's a balance here, and this is how we balance the risks and opportunities. This is the most important strategic decision we've made in our global trade relationships in many years. There is a question mark over how much you re-regulate, and let's try and talk about regulatory precision rather than regulatory easement. If we try and maximise our regulatory opportunities globally by reducing some of the burdens, well, there are two risks which you have to trade off. The first one is that there should be an equal and opposite loss of access to the European Union as a risk that we need to manage. You can't cover a double bed with a single duvet. If you try and move towards Singapore, you move away from Europe. If you try and move towards Europe, you might lose access somewhere else. The solution to that is high standards. High standards are quite a good access route anywhere. The second thing is balancing cost of fundraising versus investor protections. So, and we saw this in the aftermath of 2008 with some arguments that London interestingly had with France about making sure investors are properly protected. You need to make sure that you have a sufficient set of standards so that international investors continue to have confidence in London as a place where they can invest in risk. So for me, there's kind of this balance of risks and opportunities is really a balance of standards. Because if we can maintain sufficiently high standards, then my experience of working financial services in London is that the capital and therefore everything else flows into London. I can talk in more detail about that, but that for me is the key issue.
Okay, thank you very much. Thank you, Chair.
Thank you, Sammy. Before I move on to Assembly Member Bakari, can I just come back to Miles? You talked about 4 megatrends and you listed 2, Brexit and COVID. What were the other 2?
So,
Alan, sorry.
We're told we do look quite similar.
Sorry.
No, it's totally fine. So from my perspective, there are 4 core trends which are affecting financial and professional services, but actually, frankly, the broader economy. There's Brexit, and we've talked a little bit about that. There's COVID, we've talked a little bit about that. The third is recession, and I think it's underestimated that going into last year, most serious market commentators put the chance of a recession across the Western economies at more than 50%, and you could see that, for instance. I think I provided some data to the committee last time which illustrated that. And then the fourth is what you can call Asia pivot, or the move towards the southeast of the world. And generally speaking, to Miles's point, nowhere is the global fundraising centre forever. You know, there's a reason that Lombard Street in London is called Lombard Street. There's a reason that we call banks banks. It comes from the Italian banchiere, which bench. You know, and in the same way that London absorbed a place as the global financial centre, well, as growth in Asia grows to a point where you have significant domestically invested capital rather than exported capital, you get to a situation where financial services moves with it in order to serve it. So there's a thing that you often hear people say in the city, which is that the last thing to leave is the nameplate on the building. So the capital goes, and then the teams who trade that capital move, and then the support services move, and then finally they turn off the lights in the building. So that general trend in economic growth from the northwest of the world to the southeast is one of the 4 mega trends that I think we need to align with the other 3.
Thank you. Assembly Member Bakari.
I found that really interesting, Alan. Thank you. My question is this to Anna for KPMG. I want to know what's making you stay here in London, because there are all these concerns about skills shortages, EU reduction of staff, and if the success of the hybrid approach means that somebody who is really skillful comes from somewhere in the EU, you're very welcome to just invite that person to KPMG, work for you, but on a hybrid way. They don't have to be here in this in this city. So what's making KPMG say, right, well, we'll stay here? Because you could go anywhere.
Yeah, it's a really good question, and we are committed to staying here. We've invested significantly in our Canary Wharf buildings recently. You do need some time together with colleagues. There are some activities that are much better face-to-face. Technology is brilliant, but we have found that our teams do need to be together. We're an organisation that recruits in a significant amount of junior colleagues. At any one time, we have about 3,500 people going through training. Some of that does need to be on the job face-to-face or in a classroom. So there'll always be reasons for needing to be together. In terms of why London is the right place to be together, in the context of the UK, it is our head office. And I think we will continue to see people wanting to come to their head office for that sense of being in the centre. And indeed, some of our research across the UK economy, our UK economist Yael Selfin, has shown that we expect that to continue as a trend. So there will continue to be head offices based in hub centres, and people will want to travel there, and they will be areas of stronger productivity, and we do see London as being one of those hubs. Versus the EU, I think, again, it comes back to our historical reputation in terms of professional qualification, and again, the English language. It's hard to discount how important that is at the moment for colleagues in the EU and more broadly to want to come and have working in London on their CV. It's a huge asset, and one that I care very much about, that we protect that very valuable asset that we have.
A very quick question to Miles. You've talked about the new trade deals having an impact on London financial and professional services. Can you just give me very briefly, what are you measuring in terms of what is beneficial and what is not beneficial? What kind of metrics are you using?
So it's a really good question, and one of the problems that we've got here is that the statistics, the data around services trade are nowhere near as good as the statistics around goods. For the fact that the UK economy is 20% goods and 80% services, that isn't terribly helpful. And I've already pointed out the success the UK has got regarding the services exports that we have. This is something we've been working with ONS. It's something WTO has been looking at in terms of improving the data around services. What we do have are certain measures, and our international key facts report, which we issued this week, uses those at the basis of the analysis that we put. And so there are ways of cutting this, but it is not as an exact a science as we would hope.
I give you Assembly Member Garrett. Sorry? Do you want? You think it's covered? Thank you very much. Okay, we'll move on to Assembly Member Polanski.
Thank you very much, Chair, and thank you all for coming to committee, both physically and on Zoom. Deputy Mayor, if I can begin with you. So both the Mayor and the Government have committed to making London a global centre, a global leading centre for green finance. What impact will this have on financial services, and how can we make sure that action is taken?
Thank you very much. Good morning, and thank you very much for inviting me here today. I want to begin, if I may, to pay tribute by paying tribute to the financial and professional services sector. Throughout the pandemic, they've done a terrific job. I mean, FCA data last year showed that 84% of all the banks, building society, and post office branches remained open throughout the pandemic, and they've done a terrific job in terms of distributing the loans under the government guarantee schemes and so on. 1.5 million businesses have managed to access 75 billion pounds worth of finance. So just wanted to pay tribute to them. In terms of green finance, I mean, many of my colleagues here and on the panel have mentioned it's a huge opportunity area. Mayor is very ambitious on green finance. We want to double the size of the green economy of London within next decade. It's an area of absolutely huge opportunity. The mayor has set the target for London to be net zero by 2030. What that means is, in order to achieve that target, we'll require about 61 billion pounds worth of injection. In fact, on a more level, it could be up to 100 billion. It's a once in a lifetime opportunity where we can bring private and public sectors together and to harness this opportunity. And the mayor wants to utilize his position as the chair of C40, which is now, to really boost this as well. And we're bringing private and public sectors together. The mayor has convened several meetings in this area, and it also shows that about the UK retail savers have been putting about £1 billion every month towards the responsible investment funds last year, which shows that the consumers are also wanting that. You look at London Stock Exchange, again, huge opportunity for capital markets there. London Stock Exchange was named as the greenest exchange in the world last year. And the London Stock Exchange Sustainable Bond Market has now got 300 active bonds, which have raised about $70 billion, and London has seen 250% increase in green bonds. So it's about bringing private and public sector together and really harnessing this opportunity, and combine with that all our ambitions that we are doing around sort of clean tech, green tech, all of that together, I think is a phenomenal area of opportunity.
Thank you, Deputy Mayor. So here's my concern. I spent a couple of weeks last month at COP, and while there was a fantastic opportunity and a vital discussion for the globe to have, I was aware of a lot of greenwashing that was going on the ground. Not Wally, but some greenwashing going on. The Mayor says in his draft budget that he wants this £61 billion. Now, I was really pleased to hear you then say from public and private investment, but actually in the draft budget, it just says to enable a major increase in private sector investment. What safeguards are there, and how can we as Londoners and as an Assembly know that the money that we're accepting as private investment is ethical, that it's right, and that it's going to, to tackle the climate emergency and isn't just greenwashing?
Yeah, no, you're absolutely right. And that's one thing that one has to be very careful about, that ESG these days, it doesn't become just a buzzword in a glossy sort of corporate brochure, but actually it's genuinely done in the right kind of spirit. And I believe that the businesses, vast majority of the businesses are doing it in the right spirit. They see this not just as being responsible towards the planet and the environment, but actually genuinely see it as an economic opportunity. So what we need to do from City Hall, as we continue to do, is make it easier for them to sort of convene and sort of do business and invest in those areas. And that's what we are doing, trying to sort of bring projects together which are highly sort of investable, but the amount of the challenges, opportunity is huge, but also the challenge is huge, and that's why we've got to be ambitious, and we cannot do this alone. We have to bring along private sector with us.
Yeah, if you'll forgive me, I agree with your answer. I heard all the opportunities there. What I didn't hear, though, is what safeguards there'll be, or what checks and balances will there be to make sure that private investment is coming from the right places.
Well, as it is already, I mean, you look at any kind of sort of procurement. I mean, if you're talking specifically, so for example, the procurement powers that the mayor has through TfL, through Metropolitan Police, etc. I mean, we believe in responsible procurement, and we use that to make a lot of changes not just on sort of climate and recycling, etc., but also on good work. So, for example, so the companies that are supplying into GLA family organizations, for example, got to make sure that they are looking after their employees well, paying them fairly, providing them the right sort of working conditions, etc. Similarly, part of that sort of the whole thing is also looking at their environmental risk credentials as well. So this is all sort of weaved into the procurement strategy.
Thank you very much. And Alan, if I can just turn to you now. Obviously, Rajesh is your board's chairman. But from a London and Partners point of view, how do you see green finance and this private investment kind of conundrum?
Yeah, and look, money is neutral. Money is neither green nor dirty. It's what it's used for that is green or dirty. So if you've got money that came from something we might call dirty and it's going towards green, then it's always what it goes towards. And I think from my perspective, we're in a transition period where at the moment there is significant, but in the context of the trillions of pounds traded in London, relatively small amount of money going towards what we would call a green project. So, climate tech in London has got VC of about 28 billion behind it. That's great. I think phase 2 though, and we're not here yet, but I can see we're in transition there, is towards it not being possible to raise money at anything like market rate to fund something which you haven't demonstrated is at least climate neutral. Because that's the bigger thing, right? Because it's the price of money that defines what big companies invest in, and I don't think we're there yet. In terms of what we're trying to do, which I suppose is really the question, we went live in I think October, and I think I shared it with you, our green and sustainability investment product. And like a lot of what we do, what it's trying to do is to de-risk green and sustainable investment into London by giving people the information on how to do it better here than somewhere else. So that's a large amount of what we're doing. I think that the hope is that because we particularly feel that we have the ability to affect decision making in smaller and high growth firms who maybe don't have access to in-house strategy teams and all the rest of it, by focusing on those companies, we can support green disruption. London and Partners probably has less of a role in what I described as phase 2. That's going to be market driven by larger players and by particularly, I suspect, pension funds. But our focus is on trying to make sure that we de-risk green and sustainable investment into London, so that 28 billion of VC investment into green tech can become 60, 120, and so on.
Thank you. I think that's a really fair answer. The only thing I find objectionable, and maybe I've just misunderstood, is the idea that money is neutral in terms of, yes, it matters where it's going, but I think London has a moral and ethical responsibility to therefore accepting money that's come from exploitation or conflict or wherever it might be in the world. Then we have a duty to not accept that money and to challenge it.
Can I? So I think we're probably in violent agreement. We may not be, so I'll test it, but I think we're probably in violent agreement. Look, if I've got a £5 in my wallet, I don't know where it's come from. The question for me as the person holding that £5 is what I do with it. It may have been used to fund something objectionable in the past. The question is what we do with it. And I think we're probably talking about two separate things. One is making sure that we've got the proper legal values and other controls on use of money in London, but on the question of do we have kind of enough green money in London, that's really a question of do we have enough green investment happening, if I'm making the right distinction. So your point about kind of money, you need to know where the money's come from. Yes, but that to me is a sort of a broader and separate question, which is an important question, but a broader and separate one. The question of kind of green money is really about what it's being invested in. It's what you're investing that money in. And the money may have been used, because money is a fungible product, it may have been used for something else at some other point. But its investment is ultimately a demand side activity, not a supply side activity. So if you create the right green investment opportunities in your city, then the money flows to it, and therefore by definition it isn't somewhere else.
Yes, I agree. I think they are two separate questions, but I think they're inextricably linked, and I think it is important that we show that leadership. Thank you very much, Chair.
Before I give you Assembly Member Bakari, I'd just like to ask the Deputy Mayor, do you have a definition, broad or otherwise, for what would constitute a green investment. But for me personally, most importantly, green jobs. What is the definition of a green job? Yeah, because in the mayor's manifesto, I've heard you say it as well. You talk a lot about generating green jobs. What does a green job look like? What is it?
Well, green job essentially, I mean, if you're asking, is quite a broad term, but it's essentially in the green economy. So economy that's generating as a sort of towards working towards reducing the carbon footprint, for example. So if it is electric vehicles, for instance, or installing charging points, that would be green economy. For example, but there could be a sort of quite a
So in the
long
context
list.
of London, you're talking about new green jobs, jobs that didn't exist last year.
No, there are jobs that also exist. I mean, for example, recycling. There's a lot of recycling that already happens in London, but building on it, district heating, for example, which is happening in Islington. So again, but we want to create, we need to build sort of more of that.
I think what I'm trying to get to, because I'm trying to identify the performance indicator. So you're saying that you will be counting green jobs that do something about carbon footprint, do something about cleaner environment. I understand that part. I want to know when you'll be counting them from. Will it be the beginning of this term? Because in the manifesto, you talk about a number of green jobs you want to generate. When I say you, I mean the mayor. When will that count start? Will it be from the beginning of this term?
Yeah, I mean, it's part of the manifesto commitment, and manifesto commitments are for the second term. So yes, at the start of the term.
Thank you for that. I'll give you Assembly Member Bakari.
Hello, thank you so much. Rajesh, this is for you as well. What action is the Mayor taking to support the growth of green financial services in London? I think you've already touched on some of that.
Thank you very much. I've answered some of that in my sort of previous, in my response to the previous questions. But again, the Mayor wants to use his position as the chair of C40, for example, to show that leadership. And the Mayor's Green New Deal will focus on decarbonising London's transport, buildings, and doubling the size of capital's green economy. And we want to make London the #1 centre in the world for green finance, including setting up a new financing facility to attract greater level of private sector investment in London's infrastructure. And the aim is for the proposed facility to support projects from 2023. So we are already working with the Green Finance Institute and the City of London to identify and remove barriers in attracting private investment at scale to close the climate finance gap. And in October, the Mayor hosted a discussion with the private sector on steps to maximize the flow of private sector capital into a pipeline of London's project, aiming at tackling the climate and ecological emergencies. And also worthwhile saying that the Mayor's current £500 million energy efficiency fund can invest in projects until the middle of 2023 and is providing flexible and competitive finance and funding options to deliver decarbonisation projects such as low carbon energy networks or retrofitting of existing public buildings. So I think the opportunity is huge, and we've got to be ambitious. And again, like I said, that we have to sort of bring private and public together, use new technologies, and be creative in terms of how we tackle the climate emergency and make the most of it in a way through the green economy and green finance.
Thank you, Rajesh. Can you just, I note that the Mayor stated in March 2021 that the Green Finance Initiative, GFI, was producing an interim report. Why has that report not been published yet? What's the delay?
Well, I mean, the obvious reason, but I can sort of come back to you with the exact reasons why there's been delay. But this is again, they've been they're working with City of London to identify certain barriers, etc. So I can come back to you if that's okay, with the exact timetable of it.
Brilliant. We'll write to you about that then. Thank you.
Assemblyman Mihlurani.
Oh, thank you. Thank you for indulging me, Chair, because I know I wasn't supposed to come in on this, but I just find green finance really fascinating. And welcome to the panel and thank you for joining us. Rajesh, I might just pick up on something that yourself and Alan talked about in terms of green investment and infrastructure. And I wonder whether Miles might be able to offer some insight on this, because I think you're right about the opportunity in terms of climate infrastructure. So offshore wind farms, for instance, in the UK, there's huge potential. It's absolutely the infrastructure of the future, but actually the UK owns very little of the current offshore wind farm infrastructure. And actually what I've realised, having worked in kind of green finance for a little while, capital moves much quicker than politics. So in that kind of balance between public and private, how do we ensure, I guess, that public has enough of the meat, basically? How do we ensure that the private sector can almost ensure that, so when we look at local government as well and their pension funds, there's a huge opportunity, I think, from local government pension funds to invest in offshore wind farms. And when we saw Mark Carney, the old governor, Bank of England, talking about fiduciary duty and the need to divest away from fossil fuels and reinvest, for instance, in that infrastructure, I guess I wanted to just drill down a little bit on what does that balance look like right now? How do we ensure the public sector have a big enough seat at the table? And perhaps, Miles, you might also be able to offer some insight into that, having given your role. So I'll start with you, Rajesh. Thanks, sorry.
You're absolutely spot on that the government and the public sector needs to have a skin in the game, and divesting pension funds away from fossil fuels is a good start to that, and the mayor is fully committed to do that, and we encourage others to do that as well. But also, I mean, you mentioned, so for example, wind farms. I mean, it's not exactly London city. London's not really, I mean, for the wind farms it's a bit hard because of the obvious reasons, but there are other opportunities in terms of developing new technologies. For example, I think there's a huge opportunity, district heating, and our ambitions around that, where most of the heat, I mean, if you take the example of Bun Hill district heating, which is in Islington, I mean, it's world's first, where the waste from underground train networks is actually being used to heat buildings. It's quite extraordinary. But we need more of those, right? We need it to be distributed across London, and more part of London's heating needs to come from those sort of localized heating facilities. So we need to be more entrepreneurial, if I may use that word, in terms of what is in London's interest, because that's what people want and that's what Londoners want. Again, you know, we can't do it alone, but we have to do our bit, and we have to lead the way to a certain extent, isn't it? And also what we have here is amazing convening power. So we can welcome private sector investment. We can convene meetings, as the mayor has been doing, and bringing those players together and encouraging them to invest in the sector. But I'm very delighted that the private sector understands the real economic opportunity here. But it can't, you know, we have to look beyond. I mean, wind farms, great, but we have to sort of look beyond and what else it involves. I mean, it's retrofitting, for example. I mean, and we are doing our bit, and without going in detail, but for example, a huge fleet of sort of zero emission buses, for instance, in TfL, using the waste from underground networks and so on. So we just have to continue, and often we can learn. I mean, we are one of the greatest cities in the world, but we can still learn from, there are cities around the world doing some amazing work, sometimes very small cities and sometimes in developing world, but they're doing some good work. And that's why this C40 is a really good platform to be able to share knowledge from what we are doing and also learning from other cities as well.
Thank you, Deputy Mayor. And just Miles and then Alan quickly, and then I know we'll move on.
Sure, thanks very much. And I think one of the things that came out of COP26, and the Deputy Mayor and I think Alan have already touched on this, is that this is a partnership. This isn't something that the public sector can do by itself, nor is it something that the private sector can do by itself. And COP26 was very much about that partnership approach on green financing. If you look at the demands that exist in terms of infrastructure renewal, the International Energy Agency has already identified we're going to have to find another additional more than $1 trillion a year. I think it was 1.1 trillion a year, in order to address the amount of investment that's going to be needed to address deal with the implications of climate change and the move to net zero just in global infrastructure. And to put that into context, that's about 40% of the entirety of the UK's GDP every single year that has to be found. So this is a huge challenge. The role for the private sector and the public sector working together is how we identify these areas where we can move the ESG agenda forward, how we identify new solutions, how we provide support for ESG investment, use of green bonds, the development of ESG indices and databases, working with sovereign wealth funds is going to be a large part of this. But one thing I just touch on, and we've already talked about greenwashing in this discussion, is something that is not terribly helpful, is the regulatory fragmentation around green disclosure standards and green taxonomies. And that's going to make it harder for any single centre to emerge as a global hub here. It's going to make it easier for regulatory arbitrage, and it's going to make it a lot easier for greenwashing. So having an internationally consistent set of standards in this area is, to my view, absolutely foundational.
Very, very interesting. Thank you, Miles. Alan.
Yeah, so I mean, as I think we probably all recognise and agreed, there's more private money than public money. So unless the market leads this, it doesn't happen. So what can policymakers do to help to drive it? And there's three things, I suppose. The first thing, as Miles has talked about, is transparency, so that institutional investors and their stakeholders and retail investors through them can understand and make decisions about where they deploy their money. And as Miles says, at the moment, that's hellishly difficult. I struggle to read these things, and it's my job. The second thing is customer pricing signals. All the while, it's cheaper to drive diesel than electric or what have you. It's very difficult for individual consumers to make choices they would prefer to. Yeah. And there's an elasticity point. People will bear a certain additional cost to do the right thing, but past a certain level that they won't. We know that. And we are consumers, and we know that about ourselves. And then the third is crowding in investment, and this has been done quite successfully in the past. So the EIF funded funds across the UK, which used money via Brussels, but ultimately, of course, UK stakeholders, UK taxpayers' money to invest on a co-investment basis. Crowds in private sector money because it de-risks it, and you can do clever things with sort of first loss and that sort of thing. And the Funding London work in London has been an example of that, and that's I would argue a very competently run scheme. But if I was looking for something to kind of report on, it would be use of customer pricing signals, crowding in investment, and transparency of standards, all of which are in the gift of policymakers to improve.
Thank you very much. And maybe the regulations that Miles was talking about in terms of uniforming that. Thank you, Chair.
Thank you. I give you Assembly Member Harani.
Thank you, Chair. I think, Alan, I think one of the points you made about recession was quite alarming in your four issues that are really impacting the sector and London. And I suppose the Mayor has commented many times about there cannot be a national recovery without a London recovery. So my question with that in mind to Miles first, and maybe Sarah, if you can come in after. How can the Mayor work with government, and what can government also do to build better relationships with businesses to support the financial and professional services in London, and be a strong advocate for protecting the city given its strategic importance to the UK economy?
Thanks very much for that question. So firstly, I'd like to stress that we've had a terrific relationship with the Mayor and the administration, and indeed the GLA more broadly. I think there is an absolute recognition of the importance of this ecosystem, the financial and related professional services ecosystem, to London and to the UK more broadly. 2/3 of the jobs in this industry are outside the M25, but London is a terrific hub for that activity. In terms of what I think the industry would like to see, and we hear this pretty consistently through the conversations that we have, we've talked about the importance of talent, keeping people in the UK, keeping people in London, attracting people to London. One very brief aside I just sort of, or anecdote I just sort of identify is we can do all sorts of things with visas, we can do all sorts of things with mobility, but there is that sort of atmosphere of whether or not a place is welcoming and aspirational that attracts people. And that's very difficult to quantify. You kind of know it when it's there, and you know it when it's not there. And San Francisco has suffered from it previously. And places like Toronto have therefore been the big winners. So it's that sense of just being welcoming. So continuing to have London as an aspirational place for people who have dreams that they want to take forward, entrepreneurs who have terrific ideas and exciting things that they want to provide to customers. Having that at the heart of London, as it has been historically, is going to be vital. The other thing here is, though, avoiding the risk of silos developing between central government, within central government, and in devolved government as well. So the issues that keep London attractive for financial and related professional services don't sit within one part of government. They're not just within HMT or BEIS or the Home Office or DCMS when it comes to data, for instance, or DIT when it comes to trade deals. It's not just within central government or devolved government. So the more that the mayor can do what he has been doing, which is being an advocate for the industry and an advocate for a joint, integrated, national UK approach to the importance of London and the importance of this industry, the better. So just continuing to bang the drum on that would I think, be very powerful.
Shall I come in now? Is that okay? Yeah. So I would draw attention to three things here. Miles has touched on a couple of them. So the first is keeping a close dialogue with the industry itself around regulatory priorities, but also being clear about the risks and opportunities that regulatory changes bring. So I think, it needs to be made clear that the more you tailor UK regulation to the specifics of London and the UK, the less likely enhanced EU market access is. And that's a sort of regulatory fact, but I think you do need to be clear and transparent about the choices that are made in regulatory terms. The second, I would very much echo the points made around mobility and access to talent. So the research shows us that this has been central to London's development as a hub. And I think here, attention to both the visa, but also the mobility, day trip type business trip mobility, that hasn't really been tested post-COVID. So the mobility elements of the Brexit trade deal are very, very complex. And we don't really know how they're going to work in practice because business travel generally has been really muted due to COVID. So I think maintaining an ability for kind of ease of access for highly skilled individuals is a second area. And then I think the third, which really touches on something that's come up throughout this conversation around being a little bit humble about the strength of London and its position within the UK. I think there's quite a lot of opportunity to signal how a strong London recovery helps regional growth across the UK. And I think linking, for example, with the asset management industry in Edinburgh or the significant fintech cluster in Belfast, for example, I think being clear about what what a London-led recovery looks like for the regions is going to be important. I know the City UK has done a lot to try and promote this, but I think that's going to be very important, particularly within the wider context of a concern about addressing regional equality across the UK. I think that's also particularly important for London because we know that for some parts of the London economy, the impacts of COVID have actually been much more severe than they have been in other parts of the UK. So it kind of flows both ways.
Thank you. And you touched on some important issues about how London and other cities across the UK work together as well, because I think there's a lot of what we've heard today is about London's importance on the international scene and its importance as a global city. How does that tie in with the current levelling up agenda, and what do you feel about the current narrative around it? Maybe if I turn to Miles first.
Thanks very much. So I think the first thing I'd say is this is no longer, and nor has it been for some time, a sort of question of London or. So, it's not London or Edinburgh or London or Manchester or London or Birmingham. Very much as Sarah has talked about, there is a recognition that London is a terrific gateway into the UK that can then lead to investments that go elsewhere into the UK. So companies will come to London first, they know it. There's a talent pool here, there's a familiarity with it. And then as they get to know the UK a little bit better, they'll start thinking about, well, what is it that we could do in other parts of the UK? And you can see that with some of the American banks, for instance, who started out in London and have now opened offices across the UK, drawing on the talent clusters that are developing, particularly in terms of cities that have been good at working hand in glove with their local university, for instance, or where there's a strong professional services representation. In terms of what we can sort of do together between London and other parts of the UK, I think a lot of that is happening already. I think there's clearly a lot of cooperation between the various metro mayors in the UK. We would like to see greater devolution of powers to local and devolved level, and we'd like to see greater representation of regulators and supervisors at local and devolved level. And in fact, the FCA are making some very welcome steps towards that. They're beefing up their office in Edinburgh, which is the only one in the UK other than London. They're opening an office in the north of England. Looks like that might be Leeds. And a few other people will be based around the UK as well. And then it's, again, as Sarah sort of touched on, recognising that there are areas, there are clusters that are developing of particular specialisms and expertise in different parts of the UK, and that working together, you can offer a much more compelling, much more integrated offer to the rest of the world when it comes to financial and related professional services in the UK.
Thank you. And Miles, just very quickly, so we're reaching crunch point this weekend with Transport for London, and many businesses have come forward in support of getting the government and the mayor around the table around a sustainable funding deal for Transport for London. How important is it for the city and for financial services for TfL to have a long-term sustainable financial funding and better financial security as well? And what would not having this have on the sector?
So I've been at two major international firms that regularly review their domicile as just part and parcel of their regular governance. And everybody thinks that those decisions are made solely around tax or regulation. And the reality is they're not. They're multifaceted, nuanced decisions that a company goes through, a process that it goes through when it decides where it's going to keep its headquarters and all the economic activity that comes with that. And I really would not underestimate the importance of transport infrastructure as a part of that. Now, some of that is international, and so the benefits of London's international connectivity are self-evident, but also it is the ability to move people around a city and get them to the office with convenience, with speed, and safely. And so absolutely the importance of the infrastructure here in London is critical. Companies don't want to go somewhere where you literally can't get people into the office, and I'm sure that will continue to be the case even as we move into a more hybrid based situation. Nor do you want people coming to a city where they can't move around easily just in getting from the airport to the meeting that they want to get to. So it is part of the appeal of a city to investors. It's part of the appeal to people who want to come and live in a city and need to move around it, whether they're on an international placement or they've moved from another part of the UK. So absolutely, the importance of TfL, the success of TfL, and the infrastructure that we have here, the transport infrastructure that we have here in London is absolutely critical.
Assembly Member Howland. Before I go on to Assembly Member Sheikh, I just like to circle back to the Deputy Mayor. The Mayor runs a number of business boards, which are often, for some people, confusing and about what role do they take, what board is doing what. Do you think we could use these boards to better effect? And also, could we do a better job of managing their comms?
Before Sadiq got elected, he promised that he's going to be the most pro-business mayor, and part of that was to work with businesses and business leaders. All these business boards serve towards that. So we've got the Mayor's Business Advisory Board, which is a fantastic board on an ongoing basis. It's a great sounding board for the mayor to talk to business leaders, in a very in a trusted environment. And then more recently, around COVID, the London, the COVID Business Forum, which is to deal, and is particularly is represented by businesses, for example, who've been hard hit by the pandemic. So that's an ongoing board as well. I mean, this is just for, and then you've got obviously the LEAP and so on. So there are various boards for various purposes. So, for example, there's a Med-City board. There's a sort of London and Partners.
Sorry, Dr. Mayor, I think you're making my point for me. It's not a problem with the boards. I get the mayor would like to set up certain things to take soundings, etc. But that's my point. There is quite a few of these boards.
Yes.
Their communications to the rest of us are pretty poor. We don't know what they're for. Like, if I ran a big city firm, which board should I be trying to join? How would I find out? My point is somebody looking at these boards, making some kind of collation of their activities, and then giving it to London, to the Assembly, so we can understand what's going on. That would be my point.
Very happy to do that. We'll write to you with what are the different boards and what are the roles, etc. Everything, if that's okay. I mean, it's also on the london.gov website, but we are happy to sort of
again, that's why I remember point about poor communications. The London got the website. But there you go, Assemblyman Ahmed.
Thank you very much, Chair. I wanted, before we leave this subject, if I could just ask Miles, just in a minute, to reiterate something, go into maybe deep dive a bit more. I was very gratified to hear you talking about it not being London or somewhere else. And I think that absolutely gets to in terms of the recovery that we have to have in this country, it has to be a united effort. And I just wonder if you would like to comment on the thing that I keep saying all the time, which is about you kick London, you kick the rest of the country.
And I completely agree with that. And I would also say, so we have a group of city chairs who represent the major financial and professional services centres beyond London. So they're in places such as Cardiff, Manchester, Birmingham, and so on. We work very closely with our counterparts at Scottish Financial Enterprise north of the border, and you never hear anybody talking about doing down London. It's quite the contrary. You know, it is an advantage to Manchester and Edinburgh and Birmingham and Cardiff and Belfast that London is successful. You know, London is the kind of city that any other European city or any other European country or any other country, bluntly, possibly with the exception of the US, would love to have. You know, the cluster of talent that you have here, the gateway that it offers, and the connectivity that exists. You know, it is not an issue for, you know, a bank to have its global headquarters in London and its UK headquarters in Manchester or Birmingham. That's an advantage. You know, so these are all huge areas of potential collaboration. We're already seeing that collaboration, and I wouldn't underestimate the extent to which you know, this is seen as a cluster that is made up of a number of different hubs or a number of different spokes rather around the hub of London, and that is a benefit to the UK.
Thank you very much.
Thank you. I think the point to be made is it's politicians who talk about London too much, not business. We always talk about if you don't for London, if you don't for London. I think the rhetoric should be what we should be doing for other regions of the country in relation to London. I think that's where the problem lies. Assembly Member Sheikh.
Thanks, Chair. I'm just going to direct these questions to Rajesh and Alan. Just would like to hear from you, what action is the Mayor and London and Partners taking to promote London internationally as a global hub for financial and professional services? Rajesh, why don't you start us off?
Very happy to go first. I mean, there's so first of all, sometimes I describe part of my job is like traveling salesman, traveling around the world and selling London. And I really thoroughly enjoyed that part of my job. And I'm very proud to be also the chair of London Partners, which I think they do an absolutely terrific job in championing the city around the world as the best city to visit, to come here to study, to start and grow a business and to invest in. So we spend a huge amount of time, one, talking to business leaders from around the world. One, when we are traveling abroad, obviously for the last couple of years, it's been difficult to travel. So we've been doing a lot of virtual engagement. Equally, when there are visitors from abroad who are visiting London, we're doing that. And taking London businesses abroad. I mean, I'll let sort of Ellen expand on that. But for example, our program like the Mayor's International Business Program, which in last 5 years has taken about 1,000 London businesses overseas. These are some of our best entrepreneurs, and they are all running fast-growing London businesses. And taking them abroad and showcasing them is like showcasing the talent that we have in London. So this is all part of promoting London. I mean, one thing that has come out very, very clearly in this discussion, as well as every time I speak to businesses, is London is a very unique ecosystem. It's not just that it's the financial capital of the world, but it's also the cultural capital of the world. We've got more theaters than any other city in the world. We've got concert halls, we've got great universities, great schools, and all these things. And all of that together makes London's offering very, very unique. And we got to protect that. So when we are championing London as a great cultural city, all of that is going towards promoting London for business too, because it makes it attractive for investors to invest in, makes it attractive for the people from around the world who want to come and work here, for instance, or for the companies who want to relocate their staff from other parts of the world into London. All of that makes it much easier. I mean, part of that is also the Let's Do London campaign, which is our domestic tourism campaign, but it's got very wide global reach now. You know, for example, this week, and I urge everybody, if they've got time, in the sort of Guildhall in the City of London, above that there's a fantastic light show, Borealis, which you'll see basically northern lights and so on. So all of this has got sort of wide-reaching impact on that. The mayor also utilized COP26 as a great opportunity to sell London, because again, COP26 was attended by so many global leaders, political and from the business world. The mayor also met with the EU Commissioner for Financial Services when she visited in September and so on. So all of this is part of huge amount of international engagement, and I'll again say Mayor is now the chair of C40, again a great platform for him to promote London around the world, particularly on its sort of green credentials, and encourage other cities to do the same.
Brilliant, thank you. I mean, it's interesting because I think 2 meetings ago we talked a lot about tourism and kind of beginning to frame it almost tourism as an export. So I wonder if that plays into this, Alan. And I guess it would be helpful to drill down specifically on how that promotes London to the financial and professional services.
Yeah, and just very briefly in framing, as the committee are aware, London and Partners is, every major city around the world has a version of London and Partners, but most have several. There's one for tourism, there's one for inward investment, there's one for trade, and so on. London and Partners look at the gamut, and we were set up by the previous mayor on that basis, so that the way that I personally imagine a customer journey is, imagine a young family come to London from India, and their eldest daughter says, "Mum, Dad, I love London, I want to come back and study here." So she comes and studies here. Then she goes back to Bangalore and sets up a fintech. We know she's much more likely to then bring that fintech to London if she takes an international step in her business journey, because she was a student here, because she was a tourist here. So it is very important, as you have done, to kind of see all of those things as being very, very linked, conceptually linked. And of course, we will generally see a city more in its culture and tourism branding than we will as a business place. You know, we'll receive those messages more. Look, London and Partners, since we were set up in 2011, have added, $2.5 billion to the London economy on a very conservative measure. Significant amount of that is in financial and professional services, which is one of our core focus markets. And we started this conversation talking about Brexit, so that's a useful jumping off point for some of this. We, in the aftermath of Brexit, deliberately asked ourselves, how can we maximise the benefits of Brexit and mitigate the risks, as you need to do with any strategic choice that you make. And That was about expanding our presence into Europe so that we could lay the groundwork for trade and investment to continue to flow from Europe as that relationship improved, and we've started to see that. After a challenging 2 or 3 years for the team where they've had to do the legwork, we this year have started to see the pipeline from Europe really thrive, and we've had about £18 million worth of investment through LMP into London from Europe. But we also deliberately expanded in very consciously cities and markets which have significant financial and professional services as well as clean and green tech strength. So across North America, including in Canada, and a big expansion in India and China. And what that lets us do is focus on the what we call availability. So not just where the growth is, but where the growth which we think can realistically come to London. So just to offer a counterfactual, if we'd expanded in South America, well, there's a lot of growth in South America, and there's some really important and interesting fintech innovation coming out of South America. But it will tend to either go to New York, or if it wants to take a European step, it will go to a Spanish or Portuguese-speaking country. So we focused on where the growth is, but where the growth which is available to London is. And that's led to a 2.6 billion contribution. And just for the committee's interest, yesterday, FDI Markets, which is the big which is the sort of the big player in research and so on in our space, named London and Partners as one of the top 2 trade and investment agencies in the world. We're back in the top 2 again. Obviously, we want to push for number 1, but it demonstrates that globally we are seen as being world class.
Fantastic, thank you. And I think you've already moved on to one of the questions I wanted to kind of also drill down on, which is, I guess, how has that strategy changed since we've decided to leave the EU? And so obviously you identified the kind of longer term courting of financial services and professional services through a kind of customer journey.
Yeah.
So I guess more at a top level, how has that core strategy changed? And Rajesh, it'd be great for you to come in as well on this, because I know you spoke about the kind of adaptation to virtual, but I see those as more pragmatic changes as opposed to core strategy changes. So if I start with you, Alan, and then come back to you.
Yeah, and I'll just recirculate for the committee so that they got it to hand our strategy from which took us from 18 to 2021, and it might be worthwhile just kind of having a quick scan through that. But it's 2 things fundamentally. The first one is a market pivot. So we expanded in Europe, and that is now showing dividends. But as importantly, we looked to see where we thought the longer term growth was. And I said at the beginning that there are 4 macro trends here, and one of them is a pivot to Asia, and that took our strategy in that direction. The second, and you can think of that as being verticals. And then horizontally across that, we had a renewed sector focus on sectors which we thought were going to be resilient against change and where London had availability. And FBST was a core one of those. And of course, more recently, in response to the current pandemic and its impact on London, we've focused our mission much more to create not just growth, but growth which is resilient, sustainable, and inclusive. Resiliency is largely economic resiliency, so there's no point bringing a sector to London which we have reason to believe is about to be disrupted out of existence. Sustainable, I think we've talked a lot about, and I think we all understand what we mean by that. And inclusivity as well, because of course one of the realities of the sorts of sectors that we operate in is that a lot of people who work in them look a lot like me. So in a city where that's not the case, we've been working to find ways that we can bring companies to London and help them to hire in ways which are more diverse. So help them to move the geography of where they hire, but also move the demographics of where they hire, so that the opportunities to take on these jobs in fintech, in medtech, in culture, in urban are available to all Londoners rather than to a relatively limited few.
Brilliant, thank you. And Rajesh?
I think Ellen made some really good points. Just all I would say is in the last few years, let's be honest, UK's reputation internationally has taken a lot of battering. But brand London remains strong. I mean, UK's reputation has taken a lot of beating in terms of, around sort of Brexit, around sort of handling of COVID, etc. But brand London remains strong, and that's why straight away in the first term, straight after the country voted to leave the EU, we straight away launched the London is Open campaign. The London is Open campaign still, I mean, I talk to people and still they sort of identify with that, and that really make a huge difference in terms of keeping London open and sending that message to the world that London continues, you are very welcome here. And similarly for the EU Londoners, I mean, all the work that has been done from City Hall to say that all the EU Londoners are very welcome here, and then helping them to get through the sort of apply for settlement visa and things like that has really made a difference. One of the greatest strengths of our city is its diversity and the talent pool, and that is what we highlight significantly when we talk to international investors, and that's one of the reasons why a lot of people invest in the UK, that regardless of the industry sector, you will actually find amazingly talented people. That is one thing that we should never lose sight of. I mean, unfortunately, we don't control immigration or borders, but that is why I think it's important that Mayor has asked for more devolved powers so that we are able to sort of create, identify, work with businesses and identify the sectors where there is more shortage of talent, and then promote, bring talent from abroad should the need be.
Okay, great. And just to finish off this question, really, is it's good to hear how that change in strategy is sort of being pivoted both in the context of Brexit and the pandemic. And I just wanted to ask what you think the role of the government is in supporting London in remaining an attractive hub for the financial professional services, both in the context of Brexit and the pandemic. So what support has there been, and what role do you think there should be? Alan, which way do you want to?
Yeah, I mean, all I would say is, I mean, Mayor and I are very supportive of levelling up. In fact, even in the first term, several times I went to other parts of the UK in different cities with the message that London is open, not just to the world, but also within the UK too. And we've tried to build bridges, and we've tried to say this message. For example, when we buy trains in the UK, they are supporting jobs in Derby, or if we are buying new buses in London, then they are supporting jobs in Yorkshire, and so on and so forth. And we are all on one side. London and rest of the UK are on one side. And when London does well, the whole country does well. And I think that message is very important for all the cities in the UK. So when we talk about the government, we say, look, we support the levelling up agenda, but there is so much levelling up to be done within London as well. We've got some of the most deprived parts of the country here in London. So let's work together in trying to make this happen. There cannot be a UK recovery without London recovery. Keeping London out of the room is not the answer. We are part of the solution, not part of the problem. And I think London is the economic engine of this country, and we can really help level up in the country, and we can really help in UK recovery, and that is the message to the government.
Thank you. Alan, did you want to add anything, or has it been covered?
Yeah, we benefit from and really welcome very strong working relationships with the Minister for Investment, Jerry Grimstone, who I was at Barclays with, but also Paul Scully, the Minister for Small Business and for London, and for Minister Huddleston on tourism. So it's a really strong working relationship. But as the Vice Chair of the Northern Powerhouse said, this isn't a question of London versus the North. It's a question of London and the North arguing for more devolution. I think if I was to ask for two practical things from central government, it would be, one, to help us with funding a London International Recovery campaign, and we're in conversations with them about that. And it's quite clear we've been working with the Tourism Minister and the Minister for London to develop this, but we can identify and target tourists who are most likely to come to London and then distribute. We know who they are, we know demographically who they are, and we can go after them. And then the second thing would be our trade schemes are funded via European money. Money via Europe, it's UK money ultimately. That money is obviously running off. And I think it's quite important that we find ways of funding those schemes with replacement money, because you look at the international trade program that we run, the MIBP, Monzo, Revolut, Checkout.com, Bloom and Wild, all been through that scheme and done very well. So there's and I'm sure they feel that they played some role in their own success as well. But it would be a mistake to not replace those schemes. So genuinely welcome the co-working that we have with government, and I'd encourage them to build on that by supporting an international investment campaign and the trade work.
Thank you, Alan and Rajesh. Thanks, Chair.
Thank you. But before we move on to Assembly Member Garrett, can I just ask you? I and many members, is it Bakari? Excuse me. I'll come back to you. I've jumped across ahead. But I and many members over my time in London Assembly have been sceptical sometimes of London and Partners and what it's done. But I am beginning to warm up to it. But I have to make this challenge. This is a genuine question, and I prefer you wrote to us because it might take some time to answer. Why would the government give money to London and Partners to promote London and the specific thing you said around tourism and not UK tourism?
So can I answer that briefly, because I know you want to move on, and then I'm happy to write in more length. Yeah. So that there are very practical reasons, and the industry, by the way, the industry which works across the country agrees with us on this. London needs a specific sort of message. The way that you acquire tourists for London requires a different tone of voice and sorts of graphics, but also, and we talked about this last time when we talked about tourism, but marketing is perhaps less on the creative and more on the analytics and targeting, and the people who you can bring to London are different to the people you can bring to the Cotswolds. So you do need quite a specific sort of campaign to reach them, both in terms of what it looks like and who you're reaching, and the industry would absolutely agree with that and have made that point to central government quite well, I think. The second thing is that London is one of the top 3 reasons that people visit the UK. One of the others is heritage. I forget off the top of my head the third. So if you lose London from the, indeed it probably is, yeah. If you lose London from the message, actually you see a decline in tourism. So it is generally accepted in the industry, and if you were to talk to any industry representatives, they would share this view that London requires quite a specific message. So that's phase 1. Well, question 2 is, well, who's the right person to deliver that message? And I think it's generally felt that we have more strong expertise in the London message than, for instance, Visit Britain, Visit England do, who are just very, very good at what they do, but we are London specialists.
I get it. You have a London focus. I just asked because, of course, London and Partners was set up to have some public funding from the GLA and some private, and the proportion has wildly swung to the public purse. Is there a plan to change that?
Well, it has in the last year and a half, of course, because the committee are aware that our private sector money comes from a range of sources, but we run the .London domain name, which is profit making. We sell tickets to Harry Potter to tourists who are coming in. We have sponsorships. The .London domain name is still doing quite well because it's less affected, but ticket sales, of course, are very down, and organisations are cutting back on sponsorship. So although in relative terms our private sector income, like a lot of organisations, has taken a turn, and we've had to work very hard to restructure the business, and I led that in my day job as MD of strategy to respond to that. The intention is absolutely to rebuild that revenue stream. I think what I would say, if you don't mind very quickly, Chair, is that, and I know you've heard me say this before, but I do intellectually believe it to be true. Berlin and Paris have twice our public funding. New York has 3 times. Singapore has 10 times. It is generally understood that that organisations like ours address a market failure, and they address a market failure on behalf of the public. And so long as that they can generate the returns and investment needed, they are generally seen as being a considerably above average use of public money in terms of economic impact. So, the 2.6 now billion created since we were set up by the previous mayor does significantly outpace the amount of public money which we
I know, and I said in the past, many Assembly members, including myself, have been sceptical. I'm warming up to it, and I don't think we need to go through it now because we have other questions we need to answer. But I still think there's a few questions to answer before I start waving a London and Partners flag. Just quickly to the Deputy Mayor. What has the Mayor's International Business Programme achieved? You talked earlier about some of the good times you've had travelling abroad, selling London Square, and I don't say it as any kind of criticism. How many high potential firms have come to London because of the activities of the Mayor's International Business Programme, for instance?
I can write to you with some detail, with exact numbers, etc. But I can tell you about 1,000 companies roughly have gone through the Mayor's International Business Programme. And the way these, and again, Alan can add more detail to it, but essentially these are sort of typically a size of about 15 odd entrepreneurs in one group, and they are from a particular subsector. So it could be fintech, it could be fashion tech, it could be life sciences, it could be B2B tech, and so on. And then it's quite customized, and these trade missions are then taken. Now, of course, in the last 2 years, that's not been the case. So it's been more virtual as a result of which, and then, with these trade missions, we put them in front of potential partners, potential customers, and potential investors. So huge amount of, and I can give you the exact figures because we've got the exact numbers.
I'm going to stop you there because we understand what the activity is. We want to see what the impact of it is. So why don't you commit to write to us as committee and give us some numbers on that, because we'd be very interested, because I think that could be, if done correctly, would be a good spend of public money to make things happen.
It is amazing.
Yeah. Well, please give us some detail on that. If you're very
brief. Just wanted to make a distinction. The job of the MIBP is to take companies out rather than to bring companies in.
Yeah, and I'd like the details on that as well. That's where I started. The Deputy Mayor went somewhere else. Assembly Member Bakari?
Thank you. So we've talked a little bit about, from Assembly Member Sheikh's questions about London Partners' work and the Mayor's work and promoting London. But I do want to talk a little bit more about how we make this an internationally attractive place for London, as London as being a place to do business. And one of the things, Rajesh, I'd like to talk to you a little bit about, you were talking about how you think the promotion of saying London is open has been so successful, and yet the reality isn't always the case that London is always open, particularly if we think about the visa issues. Since the EU have now no longer doing passporting, there's the government haven't agreed to any equivalents, and actually have given up on doing an equivalent version of this. The Economy Committee in 2016 said they wanted their own visa system. So what's the Mayor doing in terms of encouraging or pushing for this new way of working and actually perhaps even having their own visa system?
Again, one of the main reasons why businesses and London is successful as a city is that people from around the world come and work and make this city their home. Almost 40% of Londoners were born outside of the UK. And it's important that we have an immigration system which is business-led, which is economy-led, and which is business-friendly. And that's why the Mayor backed the COVID recovery visa, has been called by some business organization, because we know that in so many different industry sectors, we are seeing a huge shortage of people. I know that there are restaurants who are not being able to open at full capacity because they don't have people, and so on. And that's why we need to sort of remain. So the Mayor has backed that. Also, in last few months, particularly, businesses have suffered because of a lot of travel restrictions. So again, the Mayor a couple of months ago wrote to the Transport Secretary to open the borders from countries where there are sort of low risks with all the precaution. So to help business, we need to bring international travel back. So these are some of the. Now, sadly, we don't control the borders or have got any sort of direct powers over immigration. But it's important, especially in a sort of post-Brexit London, post-Brexit Britain, that people who are from elsewhere, who are not from the UK, who are, let's say, from the EU, who are living in London, they feel like home and they feel welcomed. And that was one of the thinking behind London is Open campaign and all the stuff we did with the sort of EU Londoners in London. So we'll continue to bang the drum for London.
Because it's saying one thing, and then the reality is a different thing. Does kind of give a false impression, doesn't it? That's my concern. You know, I want London to be open, but it really has to be open, and that's what we need to make sure that we're pushing the government to do. And I'm sure that the mayor will continue to do that. The impact of London and Partners work on promoting London internationally as an attractive place to do business. Can you tell us a little bit more about that, Alan? But particularly, I'm interested in the targets that you've set for London and Partners in this particular area. I did some learning, and I know that there isn't a way of doing this in terms of using a SMART criteria. See, I'm learning here. And I'd like to know a little bit more about how you're being specific, measurable, agreed, realistic and timetabled in the way you're doing your measuring.
Keep forgetting to turn my mic on. They're very nice, these. Are you particularly interested in, if you like, the promotional side rather than the...
Yeah, we're looking at promotion and how to make London attractive place to for business.
Sure. So there's a chain of logic where we tend to think of it in terms of funnels. So you change people's consideration and then you acquire. So just to sort of start with the principles, and then we talk about how we measure each stage. So you start with quite broad work to try and change the way that people think about London. And in the case of our inward investment work, you're talking about quite an identifiable and small group of people who own businesses in Silicon Valley, own businesses in Shenzhen or Bengaluru. So you start by doing that, and then once you've identified them, then our teams in markets go and talk to them and try and identify their business models and see whether or not we can convince them to come to London. Then ultimately, hopefully, we do. So at the start of every year, we set a set of targets. The core goal for us is GVA creation, it's economic growth creation. So this year we set a target which for GVA creation, which actually we beat by the end of H1. Somewhat to our surprise, we delivered a V-shaped recovery in year. We retargeted, and we have now delivered 182 million of economic activity additional to London this year. So we have a core GVA target. And then on our brand work, it gets very targeted to the specific thing that we're trying to do. So we set targets around the number of people we reach, the reach of our website, and that sort of thing. Those are not published targets because, frankly, they're input targets. Lots of people coming to our website doesn't do anything for London unless at the end of it we see the companies come to London. So we will have specific internal targets for our websites, for specific campaigns, and then we go back and we validate whether or not we've delivered against them. But we very specifically don't have public targets for that work because it's an input measure, not an output measure, if that makes sense. For something like Let's Do London, where the campaign is its own goal in a way that the rest of our brand work isn't, then then we can be more specific and publish it. So you can say, okay, well, how many people do we want to reach? What is the size of the economic impact you want to have, and that's that sort of thing. But ultimately, on the trade and investment work, everything we do is geared towards our core metric is the amount of GVA created in pounds sterling.
And so if I was to assess your success, what do I need to be looking for specifically? I mean, are you going to be able to provide very clear data in terms of, is it footfall? Is it money? Is it amount of businesses that increase? Is it the way we trade? What am I going to be looking for?
So it's GVA. It's gross value added. It's additional economic activity as a result of our work. And I don't want to bore too much on the methodology, and I will send the methodology, but conceptually, it's growth which would not have been created without us. So how do we do that? Well, we say, okay, how much of the company's decision to come to London is due to us? And we know that we are not the major reason. So we factor out all of the part of their decision making which wasn't due to us. We also look at displacement. So we say, okay, it wasn't one of our companies, but when Uber came to London, they created jobs. They also affected existing jobs. So we're always looking to see what is the additional number of jobs based on any losses. We also assume that a job created today is worth more than a job created in the future. So if a company says we're going to create 10 jobs in 3 years, we consider that to be worth less than 10 jobs today, because we all know things can go wrong. And we adjust for the fact that entrepreneurs are always overexcited about how well they're going to do. So if we ask a company how many jobs are you creating, and they say 300, and we know what their sector is, we can look back at the last set of investments in that sector, see what they told us they were creating versus what they did, and apply another discount. So the idea is you start with a company comes to London, creates 1,000 jobs, brilliant. Well, how much of that is due to us? How much of it displaces economic activity somewhere else, and how much of it is sort of over ambition, and then we capture that smaller bit. But GVA is ultimately the thing. Now, we do know how many jobs we've created, because GVA is the value of a job times the number of jobs. We know how many companies we've brought to London. That's a bit over 2,000. Jobs created is about 75,000. So we've got that data, but our core metric is GVA, because that fundamentally is the actual output.
Just lastly, do you honestly believe that it's your work directly from London and partners that have made that direct impact?
Well, so that's exactly the right question. So on balance, no. A little bit, yes. So if a company's come to London, we are part of that decision, but we are not the majority part of that decision. What we do is we try and affect marginal decision making. So if they're looking at, by the way, we only capture companies who we know are looking competitively at London and somewhere else. So if they phone us up and this happens, hi, I want to come to London, can you help us? We do help them, but it doesn't go into the pot. It doesn't get captured. We only capture it if we have been actively fighting against Paris or Berlin or Stockholm or Shenzhen or wherever. We don't capture if we're competing against someone in the UK. We deliberately don't do that because that drives the wrong behaviours from a levelling up perspective. But we specifically in our methodology only capture the small amount of it that we can legitimately say is due to us. And by the way, just very quickly, if you put our numbers through the central government's methodology, we will be counting a much higher number. We are considered to be highly conservative, and in fact our auditors who audit our performance have said to us in both years that they've audited these numbers, you are too conservative in your measurement, you are worth more than this.
Thank you, Assembly Member Bakari. I give you Assembly Member Garrett. Is that correct? No supplementaries? Oh, let it be very small because you're over time.
It is very small. Deputy Mayor, we talked quite a while ago now about tourism. Now, I'm the chair of the Environment Committee, and I might have Shirley Rodriguez as Deputy Mayor for Environment come to the Environment Committee and talk about reducing aviation, and then you're coming here and talking about promoting tourism and internationalism. And of course, we do need tourism, particularly domestic tourism. Would you and the Mayor lobby the government for a frequent flyer levy, for instance, to square this circle, to make sure that if people are coming by means that aren't particularly green, that we're still tackling the climate emergency?
But there are still there are many ways to get to the UK. I mean, obviously, flying is only one way, but Eurostar, etc. There are so many different ways of doing it. I mean, whether it's our sort of public transport strategy within London, which is sort of walk more, cycle more, use more public transport. I mean, when you look at the international, it's on sort of similar sort of lines wherever you can. But I mean, you know, we are not. We have to be very careful about what we, you know, we have to keep London is open. We're just answering that question. London is open, and then we have to make it easier for people to come into London through different ways. So, I mean, I haven't looked straight sort of into the duty, etc. But there are other ways to promote as well. So not just in sort of aviation. So for example, one of the points that we recently made to the Treasury is where they abolished duty-free, VAT-free shopping in London, which has hurt a lot of London retail businesses, in West End in particular, but they've hurt a lot of. So those are some of the other things that can be done to sort of encourage tourism.
Lots more to ask about. I won't wind up the chair. I'll just say thank you.
Sorry, I'll just say you didn't say if you'd support the levy or not, yes or no.
Again, we haven't looked into it.
Okay, so you haven't looked into okay. Just so I give you Assembly Member Garrett.
Good morning, everyone. Is that working? Yeah, I think I'm a bit far away from it, aren't I? There we go. It's been a very interesting discussion, and actually perhaps I should declare minor interest in that before I did this, I was part of London's thriving service export economy, and that's actually what brought me to London. What I would like to do, if I can, is sort of go around, and I'll finish with Rajesh about at the end, but I think the discussion has been very interesting, and we've captured a lot of issues that I recognise. What I would like, since we're approaching Christmas, a sort of list for Santa from government and from the mayor about what they could do to ensure that London continues to be a thriving sort of international finance centre, and to ensure that it continues to be a thriving destination for sort of these service companies. So the company I work for was an American company, and when they expanded into EMEA, they located here, which obviously there are lots of other places they could have gone. How do we make sure that companies like that keep making that decision? And if I could stress perhaps bullet points rather than paragraphs. So if we start with Sarah, what would be your sort of bullet point list from the mayor and from the government?
So I think that leadership as a financial centre is earned and is collaborative. So my suggestions would be in that realm. So I think it would be demonstrating leadership internationally around regulation, contributing to international regulatory debates, and particularly in areas where I think there are real opportunities that have been discussed this morning. So, for example, trying to drive harmonisation in green taxonomies, for example, to address some of the comments that Miles raised. So that would be my first one. My second one would be work to maintain an internationally and nationally open labour market for financial and professional services. So for me, that would include work on visas, but it would also include work on mutual recognition of professional qualifications in areas like audit, for example. So I think you asked for bullet points, I would draw attention to those two.
Thank you.
Thank you. Miles?
I'd very much agree with what Sarah said. I think a partnership approach across government, whether that is central or devolved or local, is absolutely critical. I think, as we touched upon, talent is absolutely key to London and the UK's future success on this, getting the right regulatory approach in place. And I think Alan touched on this earlier. This is not about deregulation. There's no future for London or the UK in being a low standards regulatory centre. It's about having high standards, but being nimble and being able to lean into future areas of growth, such as green, such as risk management, such as digital, and such as fintech. And then making sure that we remain internationally competitive on tax issues.
Thanks, Miles. Anna, what's on your list?
So I absolutely agree on mobility, the mutual recognition of professional qualifications. I'd add in from your area data, regulation around data. I also think the point around working together, public and private, is hugely important. It's been a fantastic conversation today, so more focus on that. And lastly, just recognition that London is a global city. Our global preeminence is a huge asset to the UK, so the focus on that.
Thank you very much. I don't think I said that it was IT, but that was a very good guess, if it was a guess. Alan?
Not wholly in the UK government's gift, but addressing the access problem. I'm looking here at a list of equivalencies and adequacy of determinations we don't have. Not wholly in their gift, but that would be nice. And in my small limited part of the world, I would say replacing the ERDF funding could be transformative.
Thank you very much. And if we could finish with...
So my point of view, again, I think... So.
already done and are intending to do in this term.
Yeah, thank you. Well, really good to hear that list and reinforce my view already. And I'm glad we are working on some of the things which are directly sort of linked to us. For example, working with other cities, working with fintech, which is an area, I mean, my own background is I'm a fintech entrepreneur. So the area which is growing really fast in London. Again, many of the mayor's international business program trips have been fintech related. There have been a lot of fintech investment that have been attracted in London. You know, on the regulation side, we work closely with, we work with FCA and with the Bank of England. In fact, I remember one of the fintech delegations when I took to China about 3 years ago. There was some representative of Bank of England along on that trip as well. And I agree with the point that, you know, we should not lower our standards. One of the great things about Britain is the FCA regulations are considered gold standard around the world, and it's part of our great reputation. But what we can do is in terms of, you know, helping sort of, you know, fostering innovation and so on. And we will sort of continue to do it. But labor market remains key. We have to, and that's why we have to keep sort of pressing. It keeps on coming back. It's not just this sector, but across all sectors, that we have to continue to press to the government, that we have to keep it open. And just finally, just one last point, because we are, you know, is so close to the thing, is, you know, like news headlines like the TfL funding deal, for example, when it gets published in Financial Times, it doesn't send a great message to people around the world. So, you know, and it's not, you know, so it would be great if the sort of, you know, there is a deal that can sort that out, because it's not good look on London or Britain in front of the investors, etc.
Apparently it was my mic. There we are, we're back up. So in terms of what the mayor is doing, am I right? In terms of what the mayor is doing to both publicise London overseas and as part of that to attract businesses potentially locating or investing here, is all of that work that the mayor does essentially is through London and Partners? That is the sort of the one...
London and Partners is main, but there is a lot of direct and indirect work done by the mayor as well. So, for example, being at the COP26 and meeting potential investors there, meeting potential investors here when they are visiting London. And when the mayor, I mean, unfortunately hasn't been able to travel very much in the last 2 years, but when he's traveling abroad, and he also meets international investors there. So when we talk about promoting London, I mean, there are so many different ways of promoting London, you know, whether it's online, whether it's offline, whether it's through events, whether it's speaking various events, etc. So it's all of that in combination. But a lot of FDI related work, the foreign direct investment related work, is done via London and Partners.
So on that, I feel like my colleague has already quizzed Alan about the metrics, and I think I did at the previous meeting as well. So I'll perhaps take a break from quizzing London and Partners about their metrics. The other part of that work that you just described, how do we measure how much of that goes on and what impact, if any, that has? So the non-London and Partners bit of what the mayor is doing to promote London?
Well, like I said, London Partners one is very direct and sort of measurable, and I think if we focus mainly on that with an add-on, it's very hard to put number. So the mayor met so and so. So what I mean, it's, you know, so it's with London and Partners. And one thing I would recommend, and this has happened in the past as well, so I suggest, and there are a lot of new assembly members as well, is for London and Partners to do a session. And now they're based in this building as well. So to do a session with the assembly members to explain the metrics in some detail and more about that work, and I'd encourage the CEO of London Partners to do that.
I think that's a good idea, and I'll take that up. But I think my question was about the other bit. So the other bit isn't really captured because it's a bit more vague and fuzzy about, you know, handshake conversations at a
It's all part of
COP26.
London's soft power, is the mayor's soft power as opposed to direct numbers.
Thanks very much, Chair. I think I'll leave that there.
Thank you very much, Assembly Member. At this point, we will be coming to an end. I'd just like to thank my guests, but I'd just say this has been a very good, broad conversation, and some of the things we'll take away as committees. Look, London has no God-given right to its position. We're going to have to work for it, and I think that's a good place. London as the head office of the world, I think we need to work on that as a concept as well. And regulation. I've now transported the word regulation into my head, into standards. I think a number of the guests here have suggested that regulations are actually good standards. Often in politics, regulations are seen as red tape. To see them as high standards, I think will be useful. And of course, the fact that London is part of Britain. I think the problem we've had recently, for political reasons, it suits to set London against the country, but we all know that London is a big part of the country, and we want to take our place next to these regions, not ahead of them. And I think that's another message that came loud and clear from our guests. So again, I'd like to thank our guests for their attendance and their very, very high level of expertise. You have done a very good thing for the committee, and we'll be taking forward many of your recommendations when we write our report on this particular aspect of our work. You are welcome to stay and watch us conduct our formal business, but if you have a busy life, and I'm sure you do, you are welcome to go back to your busy life. I release you to the wild. Thank you very much for your attendance. Where am I? Point 6. Can the committee note the discussion? Can you also delegate authority to me as chairman in consultation with party group lead members to agree any output arising from the discussion? Can we ask the committee to take note of the work programme? The next meeting of the Economy Committee is scheduled for the 3rd of February 2022 at 10 a.m. I don't have a venue yet, but I'm hoping we'll be in our new home at that point. I have no urgent business, which concludes today's meeting.